Hi students, good evening again. Today we are going to discuss the very important concept, the concept of the break-even point. This is also called the CVP analysis. CVP means the three ingredients are there: the cost, the volume, and the profit. So the main concept, or the main, you can say, the topic is what is the CVP analysis, or the cost, volume, profit analysis. But in that cost, volume, profit analysis, the main focus is on the break-even point. So that's why some of the authors, they consider it as a CVP analysis, but also like a break-even point analysis. So both are okay. So what is the concept of the break-even point, or what is the concept of the cost, volume, profit analysis? In a simple way, if you see here, we have three ingredients here. The cost of the product. Obviously, the cost of the product, when we talk about the cost of the product, it is not only a fixed cost, it is not only a variable cost, it is both the fixed cost and the variable cost. So it means the variable cost and the fixed cost. So we have to consider that if there is a change in the cost, either it is a fixed cost change or it is a variable cost change, will it change the profitability? Obviously, the cost is changing. And if the other things like a sale price, the number of units they are selling, if they're not changing, obviously it will affect the profit. Okay, change means it may be a positive change, it may be a negative change, means if the prices are increasing, if the cost is increasing, so what will happen? The profit will decrease. Now, in the same way, what is the volume? Volume is the number of units. Number of units, they are selling 100 units, they are selling 10,000 units. Obviously, with each number of units they are selling, there's an effect on what? Effect on the cost and also effect on the profitability. And what is obviously the profit? So the profit is simply the sales revenue minus all the cost. So in the dollar, obviously, we have a profit if the revenue is more. If the sales revenue is more, there will be a profit, and if the sales revenue is less, obviously there will be loss. Means we have to compare that what are the cost of that business, and after the cost of the business we have to consider what is the total revenue they are getting from that. So now we are comparing the revenue with the cost, and then we are seeing either there's a profit or there's a loss. So volume, we are considering the number of units. If the number of units are changing, it will change the cost. And obviously, if the cost is changing, it will change the profit. So these are the three interrelated things while we have to consider while making the decision of the break-even point. Now, what is the basic break-even point? Break-even point, in simple word, is the situation or the number of units, or simply it is the capacity where the business is running, where no profit, no loss. It is the number of units where the company is in the situation of the no profit, no loss, no gain, no loss. So now, why we need the break-even point? What is the purpose of the break-even point if there is no profit, no loss? See, especially if the business is new, so what is their first aim or first objective? They want to get the profit, but in the start, maybe 1 month, maybe 1 year or 2 years, they are not in a situation, they are not in a position to get the profit. So what is their main thing which they want to achieve? They want to achieve at least they recover their cost. Recover their cost means what? That whatsoever they sell, at least they are getting the revenue, and that revenue is equal to their cost. If their revenue is equal to cost, what will happen? There will be no profit, there will be no loss. So the break-even point is the first step in the business which every new business want to achieve. And obviously, when there are new products are there, I mean the business is old, but they have a launching a new product. If the new product is there in the start, maybe 1 month, 2 months, 1 year, it may be taking not a very reasonable profit. So in the start, again, they want to achieve what? They want to achieve that there should be a situation, at least when there is no profit, no loss, they recover all their costs. So this is the basic concept of the break-even point. In a simple way, we can say that when the total revenue, obviously from the sales, is equal to the total cost. It is a simple equation where the total revenue is there and it should be equal to total cost. What does it mean? Means the total revenue minus the total cost, the answer should be 0. Answer should be 0 means no profit, no loss. If the answer is positive, it means what? The revenue is more as compared to the cost. It means that is the profit. And if the answer is negative, it means the revenue is less as compared to the cost. So it means the negative means that the business is in the loss. But we are not considering these 2 points. We are focusing on where the total revenue should be equal to total cost. So the business is in a situation which is a break-even point. So this is the first target which the normally business want to achieve. So this is the break-even point. It is very important while making the decision about the new product or about the running products or even for the new businesses. So this point, the break-even point or the CVP analysis is very important. So in the next lectures or in the next concepts, we will discuss that how this break-even point is calculated, what are the formulas, not only the formulas, but how these formulas are derived. So that is very important, that how these formulas are derived. By looking at those formulas, we will see that what is the situation where the company will be in the break-even point. So where the number of units they are selling, and at that number of units which they are selling, they are getting a no profit, no loss situation, means they are getting a break-even point. So this is the first target they want to achieve. So in the next lecture, what we will do, we will just make some of the formulas, we will derive some of the formulas, and we will calculate that how the break-even point is calculated. And again, there are different concepts like a target profit units, or the break-even point in the number of units, or the break-even point in the dollars, or in the value or the volume. So there are so many other concepts are there. So if there is a change in the prices, so what will be the effect? If there is a change in the cost, what will be the effect on the break-even point? So all these concepts will be covered in the next lecture. So please stay tuned. And if in that one, if you have any doubt, any question, you can ask me in the comment section. Thank you very much.